Hello, and welcome to our next NAP. NAP stands for Nonprofit Auditor Points, and I am Irina Oryshkova, your nonprofit auditor. These nonprofit auditor points, are designed for nonprofits, management, bookkeepers, accountants, and board members who want to learn more about accounting for nonprofits. Okay, let's start. Today, I want to talk about inventory, how we as auditors testing inventory. And even if your nonprofit is not going to go through audits anytime soon, these useful hints and this information might be useful for your nonprofit because we going to talk about best practices, the information that your nonprofit need to have regardless whether you go through audit or not. Okay, let's start. Inventory. What is inventory? Inventory that nonprofit has and holds for resale purposes. So if there's items that nonprofit has not for resale but for internal use, that's going to be either supplies or plant property and equipment. Inventory, it's actually items held for sale. And inventory, typically for our small nonprofit organization, we see the client have inventory such as gift cards, some supplies, school supplies. They might have some small equipment, or if your nonprofit is a store, every item that is in store is inventory. The nonprofit can have CDs, t-shirts, and other small items as inventory. For a lot of nonprofits, inventory might be immaterial amounts, but for some nonprofits, inventory can be quite substantial, depending what your nonprofit does. But let me just overall summarize what inventory, how your nonprofit should account inventory, how we as auditors look at inventory, how we verify that your inventory exists, and what are very common mistakes nonprofit have for accounting for inventory. So once again, if for merchandise in a thrift store, pretty much it's all inventory, right? Food and supplies that your nonprofit might distribute to clients, it's also inventory. Any gift shop your nonprofit might have, or gift items, even if you don't have a shop specifically, could be inventory. Any educational promotional items could be inventory. And even if a lot of nonprofits buying some items for resale during the fundraising events, it's also inventory items, right? So when your nonprofit buys inventory, it's recorded as an asset on your balance sheet. And once it's sold, value of the inventory goes to expense account, cost of goods sold. And revenue is recorded, right? So what is typically inventory? How typically nonprofits handle inventory? First of all, if you have inventory, you have to decide what method of accounting for inventory you use. There are several methods, either LIFO, FIFO, specific identification, or average cost. So we will not gonna talk about all these methods because we can spend hours. But typically, FIFO, it's a first in, first out. LIFO, it's a last in, first out. Specific identification, if you know specific value for each item and that cost assigned to each item. And average cost, you just calculate average and assign average cost to items. But again, your nonprofit need to know which inventory method, evaluation method your nonprofit use. FIFO, LIFO, weighted average, or specific identification. Then your nonprofit should have some system. It could be separate Excel spreadsheet or maybe software where you keep in track of all your inventory items, when the inventory item was purchased, at what cost, and physical count, how many items. Then Once it's recorded on a spreadsheet, you need to make sure that the value cost of the inventory agrees to your accounting system, your general ledger. Every item that was purchased as inventory needs to have an invoice where you can verify cost of the purchased inventory. If your inventory got lost, obsolete, donated, or if there's any adjustment to inventory needs to be made, then it needs to be properly documented, hopefully with the approval of management. For example, these 10 items of inventory, especially if it's a perishable inventory, maybe you were buying some inventory with expiration date and it's expired, so you need to write off. It's a shrinkage of inventory. You want to document the 10 items are no longer part of your inventory because they expired, maybe with a proper picture, documentation, signature, and you need to record it in your accounting system that the inventory items are no longer existed. Sometimes inventory items could be donated, not purchased. If the inventory items are donated, again, as same as any in-kind donation, value needs to be assessed based on the similar items at fair market value, meaning how much these items would cost to a nonprofit if they were purchased, and an inventory needs to be recorded at that value. So nonprofit will record debit inventory and credit in-kind revenue for that amount, but these items should be tracked in the same way as the rest of inventory. And the best support is a gift in kind form or acknowledgement letter when nonprofit is thanking donor for the donation, and nonprofit assess fair market value at the day of donation and records them on your Excel spreadsheet or your software where you keep track of inventory. So typically, if inventory is material number for your nonprofit, auditor need to verify the existence of that inventory. Auditor can come either on site and observe inventory, do inventory count, saying you as a nonprofit will provide a list of all inventory items, and nonprofit will make an auditor will make selections to see these items. So if your nonprofit does not go through audit, that management and maybe board members need to do inventory observation periodically at the end of the year, at least at the end of the year, get a total list of inventory items and see some items that they still exist, they properly stated. If, for example, we're saying we have 10 pinball machines, so your board members need to be able to observe existence of that 10 machines. And also, if the machine's valued $100 and you do believe it's reasonable value, that's fine. But if you see pinball machine is $1,000, you might say, is it truly value? Should inventory be valued at that value or it's not? Because if that machine cannot be resell for $1,000, that's probably not the correct value. Maybe the inventory is either obsolete or need to be assessed at lower cost or market. So inventory should be should be recorded at lower cost, right? It's a lower number. It's either cost, meaning what it costs to nonprofit to purchase, or value, whatever value. If the value of that piece of inventory no longer $1,000, you cannot keep it at $1,000 on your books. So you need to value your inventory correctly. Make sure that you're not overstating the value of obsolete items. Again, if inventory amounts is not material for your nonprofit, most likely that would not be an issue. However, if you have a lot of inventory, if the amounts are material, you need to make sure that it's a proper resale value for nonprofit for that item. So when we also testing in inventory, we not only selecting items to make sure that they exist, We also want to make sure that their value, we can also do both ways. We do it from the list of items to the floor to see if the items exist, and we also select random items on the floor to make sure that they are on the list. So testing inventory should be from both sides, from the list to the value on the floor, and from the floor to the list. You don't need to check every item. You just can select random 10-15 items and make sure that you verify them and make sure that the cost of the items are reasonable, and hopefully you can get invoice support that this is the cost of the item. Very critically, that if your nonprofit has a lot of inventory count needs to be done at the end of the year, especially December, if your year is December or June, whatever it is, because every day inventory is moving a lot, especially if your nonprofit is a store or has a lot of transactions. So you need to close maybe the store or stop selling inventory item and make sure that you have a proper day when you perform inventory observation, and it's typically at the end of the year. You can close a little bit sooner, meaning like half day, and perform inventory testing. Any adjustment to inventory, you need to be recorded and properly documented, like write down shrinkage, spoilage, whatever needs to be recorded for inventory. Physical inventory observation can be sometimes very disruptive. So if for your nonprofit you have a lot of inventory, highly advisable that your nonprofit have a good policy how to manage inventory, when to perform inventory observation. So every parties who are involved in daily sales activity, in running the store, and performing inventory observations, your accountants are prepared, so they all can come up with a plan. Your accountant can print the records from accounting system. Your operation person can have a list of items, and the store or activity is stopped for a couple hours, half day or day, when the inventory count is performed. Again, even if you don't go through audit, it's internally very good procedures just to make sure that your inventory is properly stated and accounted at the end of the year. Thank you so much. Thank you for listening, and looking forward to see you for the next snap. Have a wonderful day. Be safe.